So in this class, I am going to discuss future of Indian taxation for salaried class. Here, I will explain you about old tax regime, new tax regime, and which one to choose from these two options. This is the tax slab, the rate and tax payable. So from 0 to 2,50,000 rupees, there is no tax. From 2,50,000 rupees to 5 lakh, it is 5%. From 5 lakh to 10 lakh, this is 20%. And anything about 10 lakh will be taxed at 30%. Suppose if I am earning 30 lakh rupees as salary, this we will put it into tax slab. So how will you make it? First 2,50,000. Next the balance is 2,50,000. Here there is a difference of 5 lakh. So until here we have reached 10 lakh rupees. The remaining anything above 10 lakh is 30%. Means from 30 lakh, if you remove 10 lakh, the remaining will be 20 lakh. So here is the correct bifurcation of the tax slab. So these amounts will be taxed at these rates. If you calculate tax amount payable, so on 2,50,000 there is no tax. On 2,50,000 rupees we have to pay 5% of tax. It calculates to 12,500. On 5 lakh we are going to pay 20% tax. It amounts to 1 lakh. On balance 20 lakh, we need to pay 30%. It comes to 6 lakh. So if we add all these three, it will come to 7 lakh 12,500. So if I am earning 30 lakh rupees as income, I need to pay 7 lakh 12,000 rupees of tax before calculating any cess. But this old tax regime has few deductions and exemptions. Benefits in old tax regime. We will get something called exemptions. And deductions. Exemptions will not be taken into account for calculating income. It means few of the items are available as income, but this will not be included in calculating your total income. And there are few other amounts which are you can deduct it from total income. Means it will reduce your taxable income. The taxable income is the amount on which you pay your taxes. So in simple words, if you choose old tax regime, you will get benefits of exemption and deductions, which is not available in new tax regime. So to get into detail, we will just analyze what are the exemptions available and deductions in old tax regime.
These are the amounts earned but will not be added to compute the total income, on which tax will be calculated. They are: leave travel concession for having traveled to any destination including the family members, house rent allowance if you're paying any rent, special allowance received in performance of the office duties, daily allowance of MLA and MP, and income of the minor up to Rs 1,500. For salaried class, Section 16 provides for standard deduction of Rs 50,000, and entertainment allowance to government employees of Rs 5,000, and any payment made if any as professional tax to concerned states where the employee is working. In this section, interest payment on loan availed is available as deduction from house property income whether the house is occupied for self-residence or let out to others in the old tax regime. However, if it occupied for self-residence, then deduction cannot be claimed in new tax regime for interest portion. Even if you have any carried forward loss from house property, this can be deducted in old tax regime up to 8 years. Under Chapter 6A, there are many items on which you can avail the deduction from computing the total income provided if you've actually made such payments or investments. I have listed a few for quick go through. They can be deducted subject to certain limit in old tax regime. So what has changed? These exemptions and deductions are not available in new tax regime. I will come up with detailed calculation of new tax regime in comparison with old tax regime in next video. If you like this video, please subscribe to this channel and help to produce more content. Thank you.